You can still buy an entire cash-flowing duplex in the United States for less than the price of a mid-sized SUV. No wholesale scams, zoning nightmares, or burned-out shells. It's happening right now in the Midwest, and Wall Street doesn't know about it. While institutional investors choke out everyday buyers in major cities, pockets of America offer small-town multifamily real estate generating double-digit yields. But there is always a twist. Some towns rely on a single manufacturing plant. In others, your biggest tenant complaint will be rogue deer eating the landscaping. We are diving into 8 hidden small-town duplex markets in Indiana that corporate landlords haven't monopolized. Every single one comes with a catch, from obscure vegetable festivals to incredibly low prices that beat a standard down payment on a starter home. Like this video so the algorithm pushes it. Subscribe to learn how to build real wealth outside of a volatile stock market. This is the raw data most gurus charge thousands to see. By the end of this video, you'll either be browsing local listings or wondering why you've been ignoring the Rust Belt. Number 8. Peru. In Peru, Indiana, you can buy an income-producing duplex for less than the down payment on a studio condo in Chicago. Population sits just over 11,000. Nestled along the Wabash River, it is famously known as the circus capital of the world because it served as the winter headquarters for legendary traveling circuses. You can regularly find intact duplexes here for under $110,000. The cost of living sits roughly 22% below the national average, and average rents hover around $750 per unit. But cheap real estate comes with fine print. The job market isn't booming with tech startups. Unemployment occasionally dances above the state average, and economic options are limited outside of local manufacturing or healthcare. As one local Reddit user put it, living in Peru is like stepping back into 1996, except the local video rental store is now a discount tobacco shop. Your property taxes will be low, but management requires patience. Entertainment usually involves a trip to the local diner or watching the high school football game. Picture this. You step outside on a crisp autumn morning. You walk past a historic mansion, hear a distant freight train, and wave at a neighbor working on a vintage tractor. It's peaceful, slow, and mathematically profitable. If you don't mind a town that moves at its own unhurried pace, would you invest in a circus town for a 12% cash-on-cash return? Let the comments know. Number 7. Connorsville. In Connorsville, the average duplex costs less than a factory-fresh pickup truck and comes with deep automotive history. Connorsville was an industrial powerhouse nicknamed Little Detroit because it pumped out classic cars and appliances for decades. Located in east-central Indiana, the town is home to around 13,000 residents who cling to a proud, blue-collar legacy. The median price for multifamily properties sits around $95,000. Rents generally run between $700 and $800 a month. The twist? The factories closed down. The local economy took a massive hit in the late 20th century that it is still recovering from today. Population growth has flatlined, and a significant portion of the community is retired. One local investor noted on a forum, "The cash flow in Connorsville is real, but your tenant pool is fixed. You aren't getting remote tech workers here." Property crime is relatively low, but economic stagnation means wage growth is slow. The median household income remains modest. What do you get? A safe, predictable community where your mortgage is low, but capital appreciation won't break records. The infrastructure is older, and driving through town feels like navigating a sepia-toned postcard. Imagine waking up to the sound of mourning doves, looking out at a backyard shaded by oak trees, and realizing your monthly mortgage payment is covered by just one of your tenants. It's an income generator, but you have to keep expectations grounded. Drop a comment. Is cash flow king, or do you need appreciation? Number 6. Elwood. Elwood is a small town where you can acquire a 2-unit property for under $90,000 and still have capital left over to renovate the kitchens. Welcome to the heart of Madison County, a sea of surrounding tomato fields and a community with a deep appreciation for heritage. This town of 8,500 hosts an annual glass festival to celebrate its historic natural gas boom era. The cost of living is 25% lower than the U.S. average. You can snap up small duplexes here for bargain prices, and tenants are always looking for clean, updated rentals. But those low barriers to entry exist for a reason. When the natural gas ran out decades ago, heavy industry left with it. The violent crime rate is low, but property crime and petty theft require high-quality security and property management. As one local resident honestly explained, it's affordable and quiet. Just make sure you screen your tenants thoroughly because everyone knows everyone's business. Your cash flow will be steady, but tenant turnover might feel a bit insular. The local economy relies heavily on agriculture and regional distribution centers. Picture this. It's 6:30 p.m. on a Tuesday. You're sitting on the front steps of your newly painted duplex. Neighbors are walking their dogs, a vintage car cruises down Main Street, and the air is completely still. Elwood isn't trying to be trendy, it's just existing proudly. Could you handle investing in a town where the local hardware store owner knows your name by day 2? Give me a yes or a hard pass below. Number 5. Huntington. Huntington offers multifamily properties at prices that feel like a simulation glitch, safely tucked away from predatory institutional funds. Known as the Lime City, due to its historic limestone quarries, this town of 17,000 sites southwest of Fort Wayne. It balances small-town charm with a solid educational foundation thanks to a local university campus. Median duplex prices hover around $130,000. The rental market is propped up by manufacturing workers and college students, keeping average rents around $850 per unit. The twist: the local climate can be brutal on older properties. Deferred maintenance is a common issue in these historic turn-of-the-century duplexes. If you don't budget for roof repairs and updated electrical panels, your cash flow vanishes. One active area landlord shared, "The numbers look fantastic until you realize the house needs a complete structural update because nobody touched the plumbing since the Eisenhower administration." The economy is more diverse than other options on this list, but it still lacks major corporate offices. Think about the trade-off. Your entry price is low, your yield is high, but your initial maintenance checklist will be long. The streets are clean, but you will spend winters managing older heating systems and praying the pipes don't freeze during a January cold snap. Picture yourself walking down a tree-lined avenue near the local river. The campus bells chime faintly, students nurse coffees on porch swings, and your investment property quietly ticks along. If you want stability without the big city price tag, Huntington might be the answer. What's your take? Number 4. Wabash. In Wabash, Indiana, you can acquire a historic duplex for less than the cost of a luxury watch, and you get to own a piece of literal history. Wabash holds the distinction of being the first electrically lighted city in the world, having illuminated its courthouse back in 1880. Today, this town of 10,000 focuses heavily on historic preservation, arts, and downtown revitalization. The architecture here is stunning, featuring beautiful Queen Anne and Victorian styles. Multifamily properties can be acquired for roughly $115,000, with average rents commanding $800 a unit due to a growing interest in the town's cultural scene. But don't let the historic charm blind you to the economic realities. Outside of the beautifully preserved downtown district, economic growth is modest. The town is safe and clean, but high-paying career opportunities are limited. A local forum post summed it up perfectly. Wabash is gorgeous and peaceful, but if you aren't working remotely or in local manufacturing, you are commuting to Fort Wayne. Your investment will give you steady cash flow, but tenant pool growth depends entirely on the town's ability to keep attracting creative professionals and retirees. Picture this: a quiet Saturday morning. You are inspecting your property's exterior. The brickwork is solid, original architectural details are intact, and the street is silent save for a passing cyclist. You walk down to a local coffee shop operating out of a 19th century storefront. It feels idyllic, but your business mind knows that stability is your primary metric here, not rapid growth. Would you buy an older historic property to secure a spot in a town with real character? Drop your thoughts below. Number 3. Hartford City? Hartford City is a market where real estate prices are incredibly low, and institutional investors don't even know the town exists on a map. With a population of just over 6,000, this community is the epitome of rural Indiana living. The town square is anchored by a historic courthouse, surrounded by local small businesses. Duplexes here are priced shockingly low, often under $80,000 for properties needing minor cosmetic work. Rents stay steady around $700 per unit, driven by a tight supply of updated housing options. The catch? The local population has been slowly contracting for years. The economy is deeply tied to regional agriculture and small-scale manufacturing. If a major local employer shifts operations, the rental market feels the ripple effect immediately. One real estate investor bluntly noted, "Hartford City offers incredible entry points, but your exit strategy is limited. You buy here for the long-term cash flow, not to flip." The property taxes are practically negligible, but you must be prepared for a hyper-local tenant screening process. Consider what it really means to operate in a market like this. Your capital requirements are minimal. You can easily enter the game without massive debt, but your social landscape is quiet. Entertainment means local high school sports, a trip to the nearby reservoir, or a backyard family gathering. Imagine looking out over a wide backyard that borders a vast cornfield. The sky stretches out forever, turning deep amber as the sun sets. The air is clear, the neighborhood is secure, and your monthly overhead is incredibly small. It's real estate stripped down to its absolute basics. Is a tiny town with zero institutional competition worth the risk? Let me know in the comments. Number 2. Logansport. Logansport is a bustling hub compared to some towns on this list, yet its multifamily real estate sector remains completely untouched by major corporate monopolies. Sitting at the confluence of the Wabash and Eel Rivers, this city of 18,000 features a rich rail history and a diverse economic base. The local housing stock features large, sturdy multifamily homes built during the peak of the railroad era. You can regularly find large, solid duplexes listed for around $125,000. Rents are remarkably resilient, often hitting $850 to $900 per unit due to steady demand from a diverse local workforce. However, Logansport has its distinct quirks. The infrastructure in older neighborhoods is heavily aged. The city has sections that are thriving and beautifully maintained, while other blocks require a careful eye before you buy. As a local property manager shared on a real estate thread, Logansport has great cash flow potential, but you need to know exactly which street you are buying on. 2 blocks can make a huge difference. The job market is supported by food processing, manufacturing, and local healthcare facilities, providing a stable foundation, but it is not an overnight wealth generator. The emotional trade-off here is active management. You get an asset that pays for itself quickly, but you must keep a close eye on maintenance, local utility updates, and neighborhood trends. Picture yourself standing on a massive wraparound porch of an old Victorian duplex. The sound of the river carries slightly through the air. Trees provide a heavy canopy over the street, and a neighbor waves from their porch down the block. It's real, unpretentious, and financially sustainable. Would you take on a slightly larger town with block-by-block variants for higher rental income? Type your answers below. Number 1. Vincennes. Vincennes takes the top spot because it combines incredible history, a built-in student population, and multifamily real estate prices that institutional buyers completely ignore. As the oldest continually inhabited European settlement in Indiana, this city of 18,000 sites right on the Illinois border along the Wabash River. It is home to a major historic university campus, which provides a goldmine for multifamily property owners. Clean, functional duplexes can be found for around $140,000. Because of the steady influx of students and university staff, rents are strong, consistently reaching $900 per unit for well-located properties. What is the twist? Student housing comes with higher turnover and increased wear and tear. If you don't enjoy managing tenant transitions or budgeting for summer turnover cleanings, the student market can feel exhausting. A seasoned local landlord summarized it perfectly. Vincennes offers amazing yields because of the university, but if you don't stay on top of your property inspections, college kids will turn your profit margin into a repair bill. The local economy is stable, anchored by education, agriculture, and regional medical facilities, meaning you skip the volatile boom and bust cycles of major metros. You save massive amounts of capital on the acquisition side, building real equity, while your big city peers remain stuck, paying off millions in debt for single-digit returns. The town is safe, historic, and possesses a distinct collegiate energy balanced by deep Midwestern roots. Picture stepping out onto a clean sidewalk just blocks away from a historic monument and a bustling campus. The morning sun hits the old brick buildings, students walk to class with headphones in, and your duplex is fully occupied for the school year. Vincennes is the ultimate proof that you do not need Wall Street's approval to build an independent, cash-flowing real estate portfolio. Are you ready to stop chasing overpriced urban assets and look towards small-town multifamily properties instead? Drop your final thoughts in the comments section below.